from the heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Google takes on a new tact to tackle privacy, launching a multi-year effort to overhaul its mobile ads more gradually and less abruptly than Apple. Plus, Facebook parent Meta drops out of the top 10 most valuable companies in the world after its worst monthly stock drop ever. And what Mark Zuckerberg is doing to change course. There's a new sheriff in town. Meantime, the U.S. Justice Department has tapped a veteran prosecutor to lead a team that'll crack down on crypto cybercrimes. All that coming up in a moment, but stocks tumbling as the U.S. ramped up warnings about a possible Russian attack on Ukraine. 85% of S&P companies falling, Bitcoin going down with them. Our Kriti Gupta here to walk us through the day. Kriti, this warning from President Biden really striking a nerve.
Yeah, Emily, it is a risk-off day wherever you look. It's not just in the stock market. You're seeing it really cross-asset. But let's start in stocks. The S&P 500 dropping over 2%. A lot more pain concentrated in the NASDAQ with that tech-heavy weighting. But take a look at this. Even the 10-year yield lower. You're starting to see it down to about the 8 basis points. And that's not normal. When you see this kind of sell-off in the stock market, you tend to think it's inflation-driven. It would mean yields higher is spooking the stock market. But right now, it's very clearly, as you said, that geopolitical risk, people pulling their money out of the stock market, sticking it into bonds. That global safe haven stays that way. But hey, check this out. Bitcoin actually marginally positive on the day. A pretty muted move for a very volatile currency. We'll have to see how that functions as a risk gauge amid this broader volatility. And speaking of volatility, let's take a look at what all this selling is simply doing to the VIX index. You can now see that this is a 7-week average of that volatility gauge, of that fear gauge. Take a look at it. It's at its highest going all the way back to 2020. It tells you that's just how high the conviction selling is and how high the uncertainty is. We're comparing it back to that crash that we saw that really was brought on by the onslaught of the pandemic. And a lot of that selling was concentrated in social media names, big tech names as well. But a lot of those social media names that kind of have that double whammy coming. Yes, you have that inflation idea spooking these names. Yes, you have this geopolitical risk, but you also have the idea of privacy and ad tracking and how Google and how Apple might actually curtail some of the revenues these social media names make. So you can see a pretty broad-based selling. Meta Platforms is where I'm going to end here, down 4%, as you said in your intro, Emily, dropping out of the 10 largest companies in the world by market value.
All right, Kriti, thanks so much. Meantime, Google says it'll bring its Privacy Sandbox initiative to Android phones. This is a multi-year effort to build more private ad solutions, the company says, and an attempt to chart a more gentle path than its rival Apple, whose push to protect users' personal information has thrown the digital ad market into a tailspin. I want to bring in Adam Foroughi, CEO of mobile and software company AppLovin, and our very own Nico Grant, who covers Google for us. Nico, I want to start with you. There seems to be a massive shift in how the biggest platforms are handling privacy around digital ads. What exactly is Google doing here?
Google is hoping that it could find some middle ground or compromise between what it sees as the needs of app makers who are dependent on a massive digital ad industry and consumers who are increasingly interested in having more privacy for their data, a call that's being backed up by regulators. And so under this new proposal, Google is going to prevent app makers from sharing consumer data with one another, tracking across multiple apps, something that happens now, and it's also going to prevent them from sharing this information with third parties.
Adam, AppLovin makes software that helps customers grow their mobile apps. How does what Google is doing here impact your customers, and how does it compare to what Apple has done?
Well, thanks for having me, first of all. And the Google change, really, we don't know how it's going to materialize over the next couple of years. But when it comes to our business, what's important to note is that we have a little bit of a differentiated model. We have a gaming business that we've scaled over 200 million monthly active users of consumers playing our content, giving us data. And then we've got the advertising platform that's the very fast growing, bigger part of our business, much more profitable part of our business, and why we exist. that utilizes, for the most part, our own data to really deliver the value to advertisers. And it does certainly look like, as regulators in EU first, and then Apple, and then now Google, the privacy world changes. It's going to prioritize companies that have the first party content delivery to consumers. They trade content for data to be able to use that data for advertising and more relevant ads. More is going to be the way the world goes versus companies just hoarding third party data to deliver the same efficiency.
So, Nika, does this actually mean that user data will be more protected as a result of what Google is doing, as a result of what Apple is doing?
So in terms of how the system worked for Android users right now, it is true that less of their information will be available to app makers, and Google will only hold topics they may be interested in for 3 weeks. And during that period, they will see ads that are relevant to them. But it's not that these users will not be tracked at all. It's just that there will be guardrails over who's tracking them, how, and what permission they give.
Adam, what's been the impact of Apple's ad tracking policy on you, on the companies that you work with? I mean, we just saw Meta fall out of the top 10 of the world's most valuable companies, in part because of the significant dent that some of these Apple changes have put into Facebook's ad revenue.
Yeah, Apple obviously changed their platform middle of last year, and it was quite disruptive because it was more abrupt than a couple year in the making kind of change. And so the marketing platforms all have to adapt when these changes come. We've been able to execute really well in the past year. Our software business in 2020 did $200 million of revenue. Last year did 670 million. And this year we're talking about over 1.4 billion. So it's a very fast growing software business. And we've been able to persevere through these changes, again, because we focus on getting our own first party data and then monetizing the consumers with a more relevant advertisement, one that is a mixture of behavioral off of the data that we have on our own apps, and then the context, what games they're playing enables us to know what types of things that they're going to be interested in to go download next.
Nico, what is Google's roadmap for these changes? Obviously, we know they're going to happen over time, which is certainly different than what Apple has done.
Yes, part of the reason why Google's process is going to be so gradual is because the company has a vested interest in making sure the digital ad ecosystem remains robust. And so essentially the company is going to be developing an alternative to something called an ad ID, which is a number that allows apps to track you. One user has one ad ID. And so for developers, they will have to find a workaround once Google speaks with them, hears their input, and finds out what that solution should look like. Right now, they're saying that a beta launch of Privacy Sandbox on Android could come as soon as the end of this year. And what they called scaled testing would be in 2023, meaning that they'll test among more users. They have not actually said when it will be fully implemented. And it should be noted, they've previously decided to scuttle initiatives relating to greater privacy on their platforms.
Adam, AppLovin shares opened significantly down today, recovered some of that loss, but still ending the day down more than 6%. What's your outlook for the year, especially given some of these uncertainties and clearly the power that these platforms have?
Yeah, we've got two parts to our business, and one side is gaming that really was built to give consumers content, and in a trade for that free content, get data back to really power that software platform. And when we guided for the full year, we guided to 3.7 billion in revenue against 3.8 billion expected. But the two parts of the business are performing at different levels. We guided the software business up 300 million over consensus, and the gaming business down 400 million beneath consensus. And really, our business is a bit unique and nuanced. We've gotten to the point of so much scale on the gaming side that we're generating enough data to really power our own software in the ways we wanted to. And we've seen that flow out of our numbers, where in 2019, we did 200 million in revenue. And then next year, we're talking about 2 billion. That's 10x over the last 4 to 5 years. And we've been able to do that because of the power of our own first-party data. So we're confident with where we are in the marketplace.
All right. Adam Foroughi, CEO of AppLovin, and Bloomberg's Nico Grant. Thank you both. Meantime, NVIDIA shares down on the back of a disappointing forecast. The company beat estimates in the latest quarter and projected strong results for the current period. Still, expectations are high for the world's most valuable U.S. chip maker. Earlier this month, NVIDIA walked away from a proposed $40 billion acquisition of ARM. Coming up, Nissan revving up EV efforts in the U.S. The Japanese car maker planning 2 new battery-powered vehicles. Our conversation with Nissan COO up next. This is Bloomberg. Another down day for Meta, closing down 4.1% to the lowest level since May 2020. This knocking the company out of the top 10 biggest companies by market cap. Our Kurt Wagner, who covers Facebook and Meta, joins us now with more. Kurt, why do we keep seeing shares sinking?
Well, I mean, there hasn't really been any good news since earnings, I think. You know, when you think about the problems that came up during the earnings call, user growth being probably one of the biggest ones, and then obviously the Apple advertising headwinds that they said that they're going to face. You know, those are not necessarily things that just go away overnight. Now, there's been a lot of talk that Meta might be undervalued at this point, but you know, they haven't really had anything since that earnings report that I would say has turned the conversation in a more positive direction.
Mark Zuckerberg did try to have a more positive conversation with staff, calling this all-hands meeting, changing the company values. Move fast and break things is a value that has come back to haunt him. Now it's just move fast, and you call your colleagues Metamates? Explain how this helped. Metamates.
Yeah, exactly. I mean, so this was an all hands. They do weekly Q&As. We've talked about those before, I think, Emily, where Mark Zuckerberg goes up and answers questions. This is more of a production, right? This is a presentation of, as you pointed out, the values in this case, but like, you know, giving a sense of where the company is headed and what the mission is. We have seen those principles kind of evolve over time. And I think this is just a reflection of a company that is, you know, maturing some, but also, to your point, learning that those things can come back to bite you. And I think as they set off on this new kind of vision for building a metaverse, they don't want to have any of those similar issues that they felt with the Facebook app come back to bite them then. So I think they're just trying to get ahead of some of that with the formal jargony language there for the company.
Do you see a sea change in, you know, the hierarchy of the biggest companies in the world? Facebook has been up there for so long, and I realize this is just sort of symbolic, whether you're top 10 or 11. But, you know, what does that do for employee recruiting? What does that do for morale?
I don't think it helps, right? I mean, these are employees who have been treated to a pretty good run of success at Meta, right? Despite all of the issues they've dealt with, excuse me, over the years, they've never really had a major crisis like this from a business standpoint. And so I would say it goes all the way back to probably the, you know, shift to mobile that they like to talk about almost a decade ago when we were really asking these types of questions. And a lot of the employees that are there today weren't there in 2012 when that was happening. So I do think that this is an issue. I do think that it's the kind of thing that if you're debating between multiple jobs, you know, one that has a stock price that seems to be doing really well and one that doesn't, when that's a big portion of your pay, might be a factor here. So I don't think it, you know, can be overlooked.
All right, Bloomberg's Kurt Wagner, thank you as always for your coverage. Well, Nissan will build 2 battery electric vehicles for the U.S. market at a plant in Mississippi, marking the Japanese automaker's deepest push into North America to date into a growing field of consumer EVs. Nissan COO Ashwani Gupta spoke with Bloomberg Television after the announcement. Take a listen.
For us, this is a real move, and it is demonstrating one of the several investments we will do in the United States to have a natural shift towards electrification.
Mississippi, The other big announcement is the battery packs will be assembled here. Talk to me, who are the cell suppliers? What is the health of the supply chain for batteries in this state?
The key differentiator of an electric car, what we have experienced in last 10 years, is all about battery and the e-powertrain. And we want to vertically integrate this technology. And that's why we decided to localize the battery in the United States. However, today, it's too early to talk about the location and the timing of the cell localization. But in Canton plant, we are definitely going to do the battery pack assembly.
Ashwani, remain here. I am curious about the timetable for the production of these vehicles. According to the release, 2025 is maybe when we can finally start to see these things roll off the assembly line. Why do you need that much time to ramp up production?
Yeah, at first, as you can see, I'm sitting in a great plant, Canton, in Mississippi, which is making a Frontier, with 14% market share, and Ultima. So definitely when this plant needs to be transformed into the electrification plant, and this is not only going to be an electrification plant, this is going to be a plant which is having all advanced technologies, right from battery electrification to autonomous driving features to connected. So in addition to the preparation of the plant, we have to prepare the workforce, and that's where we are going to upscale the workforce in coming 2 years.
With that workforce, why Mississippi, and what economic incentives were you given to build there?
Nissan operates all over the world, and we believe that a strong collaboration with the government is one of the key success factors. And under the program Accelerate Mississippi, we Canton have engaged ourselves to do the transformation and upscaling of our workforce here. Now, question is why Mississippi? This plant is having a great competitiveness when it comes to quality, cost, and our competitiveness of the workforce. That's why we selected this plant to start with. Once again, this is one of the several investments we are going to do in the United States.
Well, Mr. Gupta, let's talk about the bigger picture. $18 billion by 2030, $500 million here in Canton, Mississippi. How are you going to pay for that?
First of all, $18 million, it's only for the next 5 years, out of which this is the first investment about $500 million. As we have already announced in Nissan Next, we are generating our own resources, and as we announced in our Q3 financial announcements, that we have enough net cash to move forward with these investments. But once again, this $18 billion is not the additional investment. This is a combination of additional investment, but most important, reallocation of resources from the ICE towards the electric.
Ashwani Gupta there, COO of Nissan, with our own Ed Ludlow and Taylor Riggs. Meantime, federal regulators are investigating complaints about Teslas that suddenly brake at high speeds. The National Highway Traffic Safety Administration says it's received 354 reports of so-called phantom braking. No crashes or injuries have been reported. No comment from Tesla. Coming up, a surprising report from Walmart. Quarterly earnings were better than expected, even with rising inflation. We'll tell you why. Coming up next. This is Bloomberg. A story we continue to watch. Amazon has settled a huge dispute on payment fees with Visa. The e-commerce giant was considering a ban on UK-issued Visa cards, but will now accept Visa cards across the global network. And Amazon will no longer charge an extra fee to customers in Singapore and Australia who use Visa cards on its site. Meantime, some surprises from Walmart today, the world's largest retailer posting better than expected quarterly profit and unveiling an upbeat sales forecast for the current fiscal year, despite cost pressures and flagging consumer sentiment. Bloomberg's Brendan Case joins us now with more. Brendan, what does this tell us about inflation and consumer sentiment?
The big message coming out of Walmart today is that U.S. consumers are hanging in there. They're coping with higher costs, and there's no doubt that comparable sales at Walmart stores this year are going to slow down compared with what they were during the pandemic. But that said, Walmart sees a pretty healthy consumer, and they're certainly not noticing any signs of consumers absolutely slashing their budgets. They are seeing some trading down to other goods. They flagged pretty strong sales in apparel, which probably means that people are picking up, some clothes along with their groceries at Walmart. But all in all, they've got a pretty upbeat view on consumers this year.
Is Walmart worried about inflation and costs going up?
It's clearly very worried in a couple ways. One is just in terms of its own costs. One can only imagine the discussions that Walmart's having with its suppliers right now about, keeping prices down, how much they're going to pay. And they also still have, a supply chain issue, which is going to pressure their costs. And then in terms of their pricing, they have passed through some price increases to customers. It's not as if they're completely holding prices steady. What they need to do is strike a balance that draws people into the stores, keeps the whole idea of everyday low prices high in consumers' minds, but without denting their own profit margins too badly.
We just saw Amazon raise the price of Prime, even as prices are rising across the board. How is Walmart doing versus Amazon?
The word Amazon didn't come up on the call, which is sort of funny because, everything Walmart does, they're thinking about what Amazon is doing. There were two interesting developments in the call. And one is that Walmart talked about its advertising business and said it got about a $2.1 billion boost from it last year. This is digital advertising. Now, that's just a fraction of what Amazon is making in digital advertising. But the fact that Walmart was talking about it at all kind of suggests that they're pretty confident in that business growing. The other item they talked about was Walmart Plus, which is their subscription offering, sort of a response, however incomplete, to Amazon Prime. And Doug McMillon, the CEO of Walmart, said that he wasn't ready to talk about how many subscribers they've got so far, but it did kind of hint that he might do that eventually. And so I think that they're probably looking to boost those numbers up a bit, shore up that part of the business and get it expanding a little more. And we might learn more about it later this year.
Bloomberg's Brendan Case, thank you for that update. Coming up, going further, even further into space. That is the promise of a new SpaceX mission that'll send a crew of 4 farther than any other human spaceflight mission in 50 years. We'll talk about all that and more next with Jared Isaacman, who will be on board this mission. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. I want to get a quick update on the markets with our Kriti Gupta, who's been following the stock slide today. Kriti, what are you digging into?
Yeah, Emily, well, the stocks dropped 2.2% in the S&P 500, but the semiconductor space dropped over 3%, almost close to 4%. And I really want to say, in kind of the space of when we're talking about inflation and higher oil prices, well, somewhere else we're getting a lot of that read-through from is the chip space. Take a look at this. The stocks index relative to other parts of the tech universe, electric vehicles, for example, which are in the white, and then the biotech index, which is in the blue. And you can see that it's actually been outperforming for a solid year. The idea that as investors see these supply chain issues, well, the way to get exposure to that, the way to hedge it almost, is to invest in the spots that are really in demand. And chips are one of those places. You can really see how that's fueling the stocks index relative to tech as a whole. I want to show you this is really the dynamic that you're seeing in the ETF space as well. When you're talking about fund flows, check this out. A lot more green on the screen than red. This is, of course, the SOX index, or the SOX ETF that tracks the SOX, the Philadelphia Semiconductor Index. And you can see, because of all those inflows, you can see how investors are really trying to get that exposure, even though you have days like today where a lot of that selling pressure is concentrated in technology. Nevertheless, semiconductors still kind of remain a little bit of a safe haven in the tech universe simply because of that demand that kind of remains unquenched. That is until today. This is where the selling pressure is really a good example, because we talk about when fundamentals are going to start to matter. Last night, or after the bell, Emily, NVIDIA and Applied Materials both reported earnings, both blowout earnings. But in today's session, both really taken up and swept up, I should say, in that tech selling. So the question here is, if you start to see these semiconductor companies grow and do better, does the stock price reflect it? And that's really what we're going to be watching in the months ahead.
All right, Kriti, thank you. Meantime, billionaire and private astronaut Jared Isaacman has purchased 3 more flights from Elon Musk's SpaceX. One of them will go farther than any space flight has in 50 years. The first flight, Polaris Dawn, is scheduled for this year, featuring the first private citizen spacewalk with a crew of 4. It'll also test SpaceX's Starlink satellite communications technology in space. Jared Isaacman himself joining me now. Jared, always great to have you here. Do you personally plan to fly on all 3 of these flights?
Well, I hope so, but we gotta start with the first one, which is Polaris Dawn, and we have some pretty important objectives we're looking to accomplish with that mission. And if it goes right, then we move on to the next one.
When did these discussions about Polaris begin, and how did they evolve to 3 total?
Yeah, I mean, so really what you're talking about is a partnership here with SpaceX for essentially the first private space program, which is exactly what NASA was hoping for when they commissioned this whole commercial space industry, you know, some 10, 15 years ago. The conversations began, I'd say, about 6 to 9 months ago, just prior to the launch of Inspiration 4, which was the first all-civilian mission to orbit. And the idea was, what building blocks should we be looking towards to get from where we are today to a vehicle like Starship, which is going to be the vehicle that will take human beings back to the moon. And if we can get to the moon, we can get to Mars with it. And that's where the Polaris program came up with, where these tech demonstration building block missions that will take us deeper into space than we've gone before, test out new technology that will ultimately de-risk Starship, which is like our generation's version of the Saturn V rocket, again, to take us to the moon and ideally to Mars.
You are talking about de-risking, going farther into space than ever before, and most of us regular Earthlings, to us that sounds terrifying. How much additional risk is involved when you go out farther into space, and how do you manage that?
I mean, certainly there are, you know, elevated levels of risk when you do things that haven't been done before or haven't been done in 50 or 60 years on a new vehicle. But you're also talking about, you know, some of the most talented, you know, engineers of our time right now. I mean, you think about the team at SpaceX, who's also drawing on 50, 60 years of NASA experience. You know, they're the ones who are landing rockets on ships in the ocean. They've done it nearly 100 times. No one else has done it once over the last 7 years. You know, they're real pioneers, and they're bringing science fiction to reality. So this partnership with the Polaris program is bringing all those talented minds to bear. And that's how we're going to get comfortable being able to execute on these really ambitious objectives, but being able to do it in a safe way.
What's the timeline? When do you think you'll be flying on Starship? Is it 2 years, 5 years from now? Sooner? Late? Longer?
You know, it's hard to say. You know, Elon just gave his update last week on the Starship program next to a fully stacked Starship and booster, which is huge. It's 450 feet off the ground, with the idea that it'll launch its first uncrewed orbital test flight this year. Which is the same time we will launch our first crewed mission of Polaris Dawn. My guess is we're going to make a lot of progress off that mission, which will inform our next mission in 2023. And ideally, by the time you get to 2024, we're in a good place with Starship. But we're going to learn an awful lot with the Polaris program. SpaceX team is going to learn an awful lot with these uncrewed test flights of Starship. And ideally, they'll kind of converge at the right time and, you know, over the next couple of years.
How much are you talking to Elon personally as you're moving through these negotiations and plans and, you know, building this future way out there?
So Elon was definitely involved in the Polaris partnership. I mean, we discussed the high-level objectives that we thought would be important in order to, you know, ultimately arrive at the point that Starship is ready for crewed flight. So, for example, Polaris Dawn's mission objectives, Elon was instrumental in crafting, which is we should go farther and deeper into space than we've gone before and learn from the Van Allen radiation belts that you're ultimately going to have to fly through to get to the moon and to Mars, and use that to inform countermeasures. Like we'll be wearing, you know, radiation vests. We'll have a number of sensors and experiments. It's like we should do an EVA because if we're getting to the moon and Mars, we're going to need suits, and not suits for 4 or 5 people, but potentially thousands or tens of thousands of people. So there's a lot to learn in that protocol and suit development. And we got to communicate over the speed of light with Starlink. We need that type of connectivity because even with the fastest capabilities we have today, it's a 15 to 20 minute long transmission each way from Mars. So that's what we came up with, you know, for this first mission. You know, imagine what we're going to learn from that to inform the second mission and then flying Starship, you know, at the conclusion of the program.
You're also a shrewd businessman in your work as CEO and founder of Shift4 Payments. Give us an idea of how much this total program will cost, and what's the cost of a ticket?
Yeah, so I mean, these are all developmental tech missions, so these aren't open for commercial sale at all. This is what Polaris program and SpaceX are doing in order to ultimately arrive at Starship, which at some point could be the 737 that opens up commercial spaceflight potentially for everyone. You can have up to 100 people fitting on a Starship. In fact, a Starship has more habitable volume in a single vehicle than the entirety of the International Space Station. So the idea is, if we get this right, it certainly opens up space for everyone, which is a big part of the SpaceX vision. In terms of the cost, we never disclose that. This is a privately funded space program. But what I will say is that I think what private industry can accomplish, how we can allocate capital to make progress, is substantially better than how the government can do it, where we can achieve great things quicker for the benefit of really all of humankind. And you're not just seeing it in the space industry, but obviously in other great private endeavors.
All right, well, we'll be following you every step of the way. Jared Isaacman, Shift4 Payments CEO and founder, thank you, as always, for joining us. Coming up, crypto scams. As cryptocurrencies and digital assets gain in popularity, so do illicit transactions. More on this and how the DOJ gets ready to crack down on crypto scams next. This is Bloomberg. Time for our crypto report now. The Justice Department just named a veteran cybersecurity prosecutor to lead a new team aiming to crack down on crypto cybercrimes, including those perpetrated by nation states like North Korea and Iran. The DOJ's National Cryptocurrency Enforcement Team will also work closely with the FBI's own brand new crypto team. Joining me now to talk about all this and more, Bloomberg's Sonali Basak and Matt Robinson in New York. Matt, I want to start with you. What do we know about this new crypto cyber czar? Who is she?
Eun Choi has been with the Department of Justice for almost 10 years, spending the vast majority of the time looking into cyber crimes, money laundering, dark web issues. So no surprise that she got this leadership role, which is kind of a point person among all the different agencies that the government has looking into crypto, because crypto touches so many different aspects, so many different new laws that we normally have. You have an SEC point person for crypto. The IRS has a point person for crypto, so it's kind of getting everyone on the same page, in policing and looking at, all the kinds of illicit activity that can happen with it.
Does this mean we're getting closer to tangible crypto regulation?
So this is going to be, I think, more on the enforcement side and getting more people on the same page in terms of policing these issues. So I think as they go through that and sort of go through some of these enforcement cases, they look at the kinds of things, the kinds of regulations that can help them better comply with, for instance, anti-money laundering rules, know your customer, Bank Secrecy Act stuff. So, as that sort of continues to grow, you get a bit more case law on, the kinds of things the government is interested in.
Sonali, how big and growing is the threat of crypto cybercrime?
It's really interesting because as you saw, cryptocurrency adoption really increased so much last year, Emily. Chainalysis is showing you that illicit addresses took in about $14 billion over the course of last year, with that number likely to grow as they get more information. The overwhelming amount of this, if you take a look at this chart, is in DeFi. A lot of rug pulls over here where investors, developers set up a project, take the money, and run. And so what they're saying here is that investors have to be really careful about verification when they're getting into DeFi projects. But Chainalysis also does say that this is still a very much a product of the market growing so fast last year.
How does the rise in illicit transactions compare to legitimate transactions?
Yeah, it's interesting because it's proportions, right? So if you look at how much of it was illicit activity, it was less than 1%. There's another chart from Chainalysis here that shows you that it's actually 0.15% was the percentage of total volumes that you saw, and that was less than what you saw even a year before that, and less than you saw in 2019 by a large margin. But with that said, 14 billion in total volumes is almost doubling from a year before that, and they do warn that this massive increase in total volumes is something to be worried about, as regulators are really looking at that and starting to crack down on that number.
Now, Matt, looking at this report, certain time zones, including Russian cities, are the places where they suspect the most or biggest criminal whales. How will crypto regulators crack down on folks abroad?
Yeah, that's the big problem and has been with crypto. It's not like, a bank account that you can get a court to get an asset freeze. It's just this borderless digital currency, that kind of sloshes around to these unregistered exchanges. So the U.S. is going to look at where do those crypto exchanges touch the U.S. financial system, because whatever bank is being used, they are going to be under the umbrella of U.S. regulations. But again, that's part of the reason why they have this new point person to coordinate with all the different federal agencies looking into this.
All right, fascinating. Matt Robinson, Shonali Bostic, thank you both for continuing to follow this. Coming up, the red-hot housing market. We're going to talk about the bidding wars going on as rising mortgage rates are inching even closer to 4%. All that and more with Redfin CEO Glenn Kelman next. This is Bloomberg. A shareholder advisory firm is urging Apple investors to vote against CEO Tim Cook's $99 million pay package. According to Institutional Shareholder Services, half of Cook's award is time-based and doesn't depend on criteria like Apple's share price. Since 2011, Apple's total shareholder return is more than 1,000%. Meantime, mortgage rates in the U.S. are getting closer to 4%. The average for a 30-year loan, 3.92%, up from 3.69% just last week, and the highest since May 2019. This has unleashed massive bidding wars, with homes selling at record speeds and buyers struggling to find homes for sale. I want to dig into all of this with Redfin CEO Glenn Kelman, who is fresh off his earnings call. So do you think these rising rates, Glenn, are going to impact demand?
They will, but not enough. We are so inventory constrained right now. 55% of homes in January sold in less than 2 weeks. That is an all-time record. I thought it was crazy last January when it was closer to 50%, but usually it's in the 40s. And that has been in this supply constrained market over the past 5 years. So it's just gone to a new level. Almost no one is putting a home on the market. A third of the properties that are selling are coming from builders because individual homeowners are just standing pat.
But 4%, I mean, give us the sign. 4%, is there something about that psychological barrier that just makes it feel too high?
I worry about it. Affordability has really come under pressure because you have the home price increase coupled with this mortgage rate increase. Effectively, consumers are paying 30% more for a home than they were a year ago. But you just have to remember that so many of them are moving from California to Ohio. And so the Ohio home is going to look cheap no matter how much interest rates go up. So relocation and second home purchases are still off the hook. I think the bigger issue isn't just mortgage rates, but the overall economy. People aren't just using their salary to buy a place anymore. They're using the stock market, their equity and tech companies, or their investments to fund that down payment. And as the stock market gets really shaky, I think you may see some consumers step back.
I'm wondering about first-time buyers. Are first-time buyers going to be permanently frozen out of this market?
Permanently is a strong word. People find a home eventually. Right now, they've just been looking for so long that it seems that they're undeterred by this rate increase. They're just determined to get a house, and they're tired of being outbid. And so I do know many first-time home buyers are frustrated. They're having to wait longer. They're having to look further out. But because this is such a big, beautiful country, and you can now zoom into your job, people are just going to find a home, not 5 minutes outside of the downtown area, or even 30, but an hour and a half. There's room enough for all of us. So eventually we're all going to get a home, and the builders are coming to the rescue. There is so much supply coming from them soon, and that's exactly what this market needs.
So I got to ask you about the stock price, down almost 15% right now after hours. Why aren't these massive bidding wars and hot demand translating to investor interest in Redfin?
Well, we were trading much higher a few years ago or a year ago because the housing market was even crazier than it is now. And so people are worried that rising rates are going to affect all real estate stocks. And so sometimes I feel like I'm this loaf of bread and it's just as tasty as it was before, even if the loaf is less expensive. It's still the same bread. That feels like a crazy analogy. I'm not a loaf of bread, but the company is delivering great service. It's taking market share. It's improving gross margins across almost all of its product lines. All we can do is make our customers insanely happy. And the stock price will eventually follow that, even though the whole sector is down right now.
So talk to us about the recipe. I mean, how are you going to convince investors that argument? Same bread.
I'm not even trying to convince investors about that argument. Of course, I care about, I want everyone who buys our stock to make money from it. I appreciate your support, but the people I'm really focused on are our customers. We want to run the company with great financial discipline. We want to grow revenues and drive profits, and the stock price will take care of itself. But if you spend all your time in investor conferences trying to market to those folks, when what you should really be doing is selling houses and making customers happy and making money, you're going down the wrong path. So our plan is just to take share, to get operating leverage, to drive more profit to the bottom line, and to build a fantastic company. And maybe the deepest thing that I have to say about this, I know that you should never think on TV, but that's exactly what is happening now. There is this idea of a sizzling hot or sexy company that most people have. And what Redfin is something different. We are just a good company. We are good to our customers. We are good to our employees. We run the company with great financial discipline. And that goodness, eventually, I think, is something the market will reward.
So let's talk about something different. I have to ask you a metaverse question because we're now seeing people buying virtual real estate, spending money on virtual real estate. What do you make of this trend? Is that a threat?
I think it's a total crock. Like when my kids are online, I tell them it doesn't actually make you happy. Put the MacBook down and go outside and throw a ball with your friends. And I would tell every adult that too. If you are buying some virtual property, oh my God, go for a walk with your dog.
So what do you have to say to Mark Zuckerberg then, who's pivoted his whole business on this vision of this future?
I don't have to compete against TikTok, so I don't have to insist that the metaverse is the next coming of Jesus Christ. That's what I would say. But I mean, look, I don't even get to talk to Mark Zuckerberg because he's, this legendary entrepreneur. Maybe you should listen to him instead of me, but it just doesn't add up to me.
All right. Where do you think the demand is going to go? What's going to stay hot? What's going to cool down when you look at cities versus suburbs, especially as companies are calling people back to the office?
I don't think that trend is reversing. I do believe that suburbs are the future. America is diversifying in the suburbs. People want that space and they don't seem willing to go back. Once you get a yard and a 3-car garage, you're never going to move into a condo again.
How's that impacting Redfin's work from home policies? Microsoft just gave employees a date. They're in your backyard.
Oh man, did they? What's the date?
February 28th. Microsoft calling folks back to the office for 3 days a week, I believe.
Look, we need to do something to get people gathered around the water cooler, but we're going to have to figure that out together with our employees. I'm not going to issue some kind of mandate. I know that we're all going crazy from doing Zoom, but it's just hard to put the genie back in the bottle and tell people that you got to clock in from 9 to 5 and we're going to be taking attendance. So maybe we'll get a taco truck and a coffee cart and try to get people to party at Redfin's offices 1 or 2 days a week. But we mostly just need to put our nose to the grindstone, work our tail off, and take share.
Okay.
And that can happen anywhere.
Glenn, we always love having you, just gesticulating and all. Thank you for joining us. Fresh off the call, Redfin CEO Glenn Kelman on Zoom. That does it for this edition of Bloomberg Technology. Tomorrow, Amy Webb, Future Day Institute CEO. She'll talk about her new book, The Genesis Machine. You don't want to miss that, and so much more. I'm Emily Chang. This is Bloomberg.